Hi, and welcome again to another edition of Market Analysis for today, July 2nd of 2024. I'm Giovanni Betancourt, analyst, trader, and educator with Vantage Markets, and this is being recorded previous to the U.S. session open. All right, well, let's get started. Presidents love to take credit for stock market gains under their watch, even though experts suggest that whoever is in the White House has little impact on overall performance. Having said that, it's certainly the case that presidents and other branches of government are capable of moving markets. And that has been happening over the past few days as investors increase expectations that Donald Trump will be elected in November. President Joe Biden's shaky debate performance and the Supreme Court decision favoring Trump's broad immunity have moved the needle. The story of the S&P 500 and other indices hasn't changed much. The big technology stocks are driving gains. The rest aren't doing nearly as well. Nothing new there. But the bond market is definitely shifting. Yields are rising even though the latest news on inflation was encouraging. What's more, yields on longer-term debt are rising more than on shorter-term notes, narrowing the inverted yield curve of the past 2 years. That exists because bond traders expect Fed rates in the future to be lower than they are now. They could be changing their minds if they expect a second Trump term to be inflationary. Why would they think that? Well, Trump said he wants to cut taxes, which often leads to increased budget deficits and thus more government borrowing. His plans to raise tariffs on imports, particularly from China, is also inflationary. And his digs at Federal Reserve Chair Jerome Powell might make it even harder for the central bank to keep inflation under control. There are also certain sectors that stand to win or lose with another Trump administration. Steel companies, some healthcare stocks, and banks that may benefit from less aggressive antitrust enforcement are a few that could gain. Clean energy stocks are headed for a tougher time. One thing is clear, politics is now a major market force. And with that even said, let's take a look at what we can expect from market fluctuation today. Yesterday we closed in the green in the Nasdaq. It was basically more of a lower trending. It dipped throughout the session, but it recovered quickly and it did close in the green. So being that it closed in the green, okay, but it didn't quite reach where it opened on the previous day, which was Friday. Today's fluctuation is looking more to the downside. So therefore, I'm going to bring down my support really again to this double bottom created last week, actually the previous week, really. And say that today we might be having a pullback, a retracement. Markets have been obviously on a tear, making, just steadily climbing. But now the markets have created, again, this level of congestion, this coffin of congestion, equal highs as equal lows, okay? And with this scenario on the back burner and nothing much really from big companies to be reporting, there's no catalyst from the markets itself that will move the needle. So I am speculating that we might just see a red day. So selling the Nasdaq. Then we'll take a look at the S&P 500. And the S&P 500 is already in that particular mode. So I am going to bring down that level of support to right here. Basically, somewhere around here. The bottom, medium, okay? Markets may have the tendency to trade to the medium when we apply the Bollinger Bands. And they could have a tendency to make a reversal. So they trade here and then reverse and move to the upside. Or they could obviously continue to trade lower. But for those aggressive ones, selling in the morning session could be an opportunity. So selling. Then we have the Dow, which is also creating, because of the wicks, they're very, very long. Basically, the doji yesterday, flattish day, even though the market did fluctuate to the upside, and then it corrected itself and it closed basically in the red. So that movement of that fluctuation could spill over to today's session. So I'm also going to bring down the support to that level of the medium. So selling also. Well, crude oil is on a nice move to the upside. We had $83 yesterday. It has been broken. So $85 is going to be the next level of resistance, and 82 is going to be our support, psychological round number. So going with the motion, RSI is almost entering overbought territory. So buying crude oil. Nat Gas, well, we saw Nat Gas opening with a big gap down yesterday, and it did close in the red, and it's continuing to move lower. So I'm going to use this previous double bottom here as a level of support. It would have come down today as far as that today, perhaps not, but it's definitely a level for us to consider. So let's just also bring down our resistance to somewhere around here. So selling the Nat Gas. Gold. Oh, gold yesterday did a little tweak to the upside. It's staying within range. It's looking to break to the downside today. So let's go with a momentum. 2300 can be the target, or even higher. So selling gold. Silver open with a small gap down. So $29 can be the initial. I'm just going to bring down my support to $29. I think selling it today could be a profitable scenario. Copper, demand for copper obviously will always be there. It's going to be obviously increasing. So looking to buy copper. So 445 is my target. Let's take a look at Bitcoin. Okay, well, Bitcoin yesterday kissing 64 and retreating, closing below it. Now today we probably see seeing some profit taking in Bitcoin, but I'm still looking to. I'm just gonna stay out of it. It could actually, continue to move higher. So let's just bring up our resistance of 65,000. Initially, I will say that Bitcoin might move higher, but I'm not gonna be looking into buying it. All right, so the euro, the currencies, yesterday they had a nice fluctuation to the upside. It very quickly retreated. The traders must have obviously had something to say about that. Today opened with a small gap down, and it fluctuated lower. Let's see if it'll stay within range around the 107.5 marker. Basically out of it. That the pound seems to have a better notion of where its direction might be. So let's see if today will also come back to the mean. So buying the pound, and the dollar index is looking so far. This earlier in the New York session, it did fluctuate to the 105.80 or 74. It retreated, so now it's flattish. I'm thinking that the dollar index, which opened with a gap up, could probably continue that momentum to the upside. So keep that in mind. All right, that's it for me today. Have a great trading day, and I'll see you tomorrow.